Hey, what's going on, guys? I want to make a video talking about the complete beginner's guide to investing in stock. If you're new to stock markets, don't know what is stock, why you should even bother investing in stocks, this is going to be a video which you would not want to miss, right? So let's start. So first things first, I mean, why you want to even bother doing this so-called investing in stocks, right? I mean, if you want to analyze in terms of where is the money or who is making the money, you always want to take a look at in terms of the Forbes 100, 400 list and see, you know what, besides these people, what are they actually doing? Based on the numbers with Forbes.com, almost a quarter of the 400 names of the richest Americans, they work in investing and finance industries, right? Quarter of 400 names. So it means out of 400, 100 of them are in stocks, right? Or stocks related. One of the reasons. So if you want to increase your probability in terms of being wealthy, that's one way to look at it is where are the wealthiest people, and chances are you might want to be one of them, or if not, maybe a percentage of what they make, right? So this is what the real math is. Now, in terms of some of the most well-known people are Warren Buffett. If you haven't known who is Warren Buffett, you can definitely go and Google him, and you will see, uh, right, business magnate, investor, philanthropist. So he's really known for his investing, right? A whole bunch of great quotes. Price is what you pay, value is what you get, and so on, right? So a lot of books written about Warren Buffett. If you don't know who he is, it's a good idea to look through it. One of the richest men in the world. The other person you want to talk about is George Soros. If you just want to look up George Soros, let me just pull that up. The another one of the billion-dollar people, right? 87 years old. Again, he's an investor, and he's actually one of the most successful investors out there, right? Based on 2018, he's actually worth about $8 billion. So there you go. The next one in line is Carl Icahn, right? If you just want to look up who Carl Icahn is, American businessman against an investor, right? Once they become investor and then they become philanthropists, right? Then they give the money out. But in terms of what makes them rich is already being an investor. Net worth about $19 billion, right? So as I mentioned, I mean, out of 400 top list, 100 of them are stock investors, and so that's where the money is. So that's where you should be going. Now, what exactly is a stock? Stock is a legal ownership in a business, right? So, for example, if you want Apple, which is a company which everybody knows about, if you want to own their shares, if you want to be owner of an Apple stock, it's better to be the owner of an Apple stock as compared to be an owner of an Apple phone. Why is that? The reason being is you become the owner of the business, right? So corporations will issue stock. Usually they come in two variations: common stocks, preferred stocks. Common stocks, the name can be used is generally when you can buy it on the exchange, right? It trades on a regular basis. You can see that if their company app, for example, the Apple stock, if it goes up, then you can make money on the upside. If they pay out dividends, you can make money as well. So common stocks is where most of the money is being made, and these investors, they are generally sitting in common stocks. They would look at preferred stocks as well. For example, Warren Buffett, he did look at the preferred stocks when the market were really going south during the financial crisis, right? So that's one way to do it. Now, in terms of how do I make money investing in stocks, right? So when you talk about investing in anything, whether it's stock, real estate, or whatever, there's two ways to make money. Through investing, it's you can make interest or dividends, right? So a company makes money, they're happy to give out money out to the investors, so you can get dividends. Or if the company is really perceived value, the company is good, so the price of it might be higher. So for example, right now it's trading at $100, and people think that, hey, you know what, this stock can go up to $200, so they're willing to pay higher in the anticipation that this is actually going to go up to $200, right? So that's one way to do it. Or if they pay out dividends, the other way to do it. Now, as an investor in common stocks, right, you always want to be looking at, if you want to really create wealth, is really in terms of focusing on total return, right? Total return we're talking about in terms of in terms of the increase in the price of the stock and the dividends it makes, right? So you need to focus on total return and make a decision to invest for the long term, which means at an absolute minimum, expecting to hold each new position for at least 5 years. right? The reason being we're talking about 5 years is from the start when there's a new CEO from the planning strategy to execution, generally about 5 years, right? So this is a really way to build real wealth in the stock market, right? Now, in terms of how can I find stocks for my portfolio, right? So let's say you decide, hey, you know what, stock is really a great thing for me to get into. Now you want to decide in terms of, hey, how do I buy it, or what kind of stocks do I buy? One way to do it is look at the Standard & Poor's large cap, mid cap, small cap, right? So S&P 500, you have the mid cap, the small cap. So large cap is companies which is well established. Mid cap is companies which have grown more but hasn't grown as much yet. Small cap is companies which is startup upcoming companies, right? So if you have more risk, you want to invest in small cap, but generally the most conservative portfolios is generally going to be in mid cap and large cap because they have proven track record. The other investment idea you can have is, you know what, just take a trip to the mall, gas station, grocery stores, whatever. The reason why, let's say you walk into a mall, you see this store, for example, right now I'm in Canada, so if you walk into Canada Goose store, you see that there's a lot of lineups. What it means, it means a lot of people want to buy that kind of stuff. Or if you, a few years back, it was Michael Kors, you can see people lining up for Michael Kors, right? What does it mean? I mean, all of the lineups is going to translate into sales, right? The other one is in terms of investment idea number 3 could be ask your spouse and children. Ask your spouse, hey, what kind of jewelry maker is doing well? Is it Tiffany? Is it something else? What kind of bags are more in fashion? Are they being listed on stock exchange? If you have kids, see what kind of social media they are on. Is Snapchat doing better than Twitter? Is Facebook doing better than Snapchat? Or where's the next best thing that you're on all the time? So based on that, you might want to find the stocks that you want to find for a portfolio, right? Or maybe if they're spending a lot of time on Netflix, right? So that's, you want to see where are they spending the most amount of time, and you want to be owning those kind of stocks. In terms of so once you've decided which stock to buy, now your chance is what kind of broker you want to use. So a couple of accounts that you can do is looking at taxable and non-taxable accounts, right? You want to take a look at the most tax efficient is non-taxable accounts. So you buy some stock, it goes up in value, you're not taxed on it. That's the best way situation. Or it could be taxable accounts, so depending on which country you live in. There are commissions, right? Commissions is when you buy one stock or buy 100 shares. How are the fees being structured? Is it $10 per trade? Is it $9 per trade? Or is it based on the share size, right? So you want to definitely take a look at commissions. Some of the trading fees is if they're going to charge you any ECN fees in terms of market orders, limit orders, what they're going to charge. Sometimes it could be maintenance fees. Just because you have an account, they're going to charge you a fee, right? That's how the brokers make money. Then you want to take a look, if you are more of a technical analyst, you want to take a look at charting. Do they have any charting available? Is it live charting, delayed charting? What is the cost of getting live charting, right? Financials. You want to definitely take a look at the broker financials. I'm not talking about so 2 financials I'm talking about. One is into the broker financials, which means they have enough money. Something goes south, they have money to cover. Second is, do they have financials for the stock that you are researching for, right? You also want to look at if they have any research or analyst reports. Different kind of brokers out there, they will have their own analyst reports to give you an analysis of a particular stock. Maybe see if there's a buy, sell, or hold. They will have those research available, right? So you want to see if a broker who can do those kind of research for you. Then of course safety, right? As I mentioned, financials of the broker is important. Something like for example the forex broker, right? Let me pull that up. Forex, FXCM, stock crisis, right? So something like this happens, where something like FXCM, which is a foreign exchange broker, I mean, stock went to record low because of some retail currency blow up, right? So you definitely don't want to have that kind of situation to happen. So the safety of a particular broker is key. You don't want to put your money into something and then it goes belly up. So yeah, those are the guides for if you're just starting off for investing in stocks. Any questions, hit me up. Have a good one.